Welcome everyone to our first ever Zoom event with Guildhall Wealth. My name is Jeremy Wiseman. I'm Vice President of Guildhall. Jerry Correa, longtime associate, veteran associate at Guildhall. And today we're gonna talk about chat about the markets a bit, what we've been seeing over the course of the year. Then we're gonna move into how would you actually hold and own direct product in your registered account. And then, of course, can't wait to get to your questions. Just before we get started on that, you'll see at the bottom of your screen the question and answer button on the right. So you want to make sure that you're using that instead of the chat function. So bring all the questions on throughout the presentation, and then we'll jump in at the end and we'll try to get to as many of them as possible. And before we get started, I want to just also thank Jerry for being here, Jeff for helping us put this all together. It's been pretty amazing so far. So let's get started. Jerry, the year that was, it's been a pretty incredible year for the metals. Not something completely unexpected, perhaps?
Not so much. Definitely a very eventful year so far. We remember prior to the COVID situation, the pandemic situation, that things were happening in wealth management, in finance, that were affecting us. We remember the repo market situation, a lot of money printing, and a lot of the same old, kicking the can down the road type of monetary policy. And we were ready for this. Nothing is new. This has been happening for years and years, but it's being amplified even more so today.
Yeah, definitely the fundamentals that we've discussed on the Real Money Show at length for our listeners to the Real Money Show. And also just the idea of all of the fundamentals, they've been in place. Actually, let's put up our first chart. I think it's a great place to start, just because it shows what gold has done. I think in terms of, if we're talking about the myths, one of the things that people will say is that gold is volatile. And when you talk about things, for example, like, we always knew this was coming. It's not completely out of the norm. There were certainly triggering events this year, which we'll get into in just a moment. But this is probably my favorite chart. I show it to everyone who comes to Guildhall, which is the gold price performance chart, because I think really what it gets to the nitty gritty of is that, as far as one fundamental, which is the debasement of currencies, this definitely shows that gold keeps up with inflation.
I mean, look how clear that is. This is a chart of a 15-year chart of gold performing versus every single major currency in the globe. And what we see here is two things. We see an apparent currency issue. Gold performs versus every single major currency across the board, whether it be US dollar, Aussie, Canadian dollar, Swiss franc, yen, you name it, it goes down the line. Gold is averaging roughly 11-12% per year. And this is what you're getting in gold versus holding cash. So for those investors who think that I'm going to park it in cash, well, you may want to think twice, look at this performance and see what gold actually does versus a devaluing currency.
Yeah, and this chart is already behind. I think gold is actually up about 24% in US dollars, and in Canadian dollars, we've pushed over the 20% threshold, and that was just this week alone.
Yeah.
We saw that there was a pullback at the end of November. This was not as epic as the one we saw back in March, but it was definitely a concerted effort to try to push that price down as much as possible, but it's not working anymore. And I think that's the other side of this. Some people will talk about, for example, manipulation. I mean, all markets are manipulated. They're manipulating interest rates. They're manipulating all the markets as a result. But definitely there's been pressure on the gold market because of the paper market, the paper inventory. And what I think the takeaway from this year in particular was what happened in March. The fact that they, the paper market went into full gear. Probably the biggest aberration of the year was that week and a half where gold went down precipitously, silver went down. I think we were trading around $18. It went down to mid $11 range. It was pretty magnificent to watch. But people would ask, well, why is it down? But it was the biggest head fake.
That's right. It was totally a head fake. And what it also proved was that in times of uncertainty and if not crisis, you have the liquidity in precious metals. And I believe that's what it was. It was a pullback in the market and people decided to, maybe unwind some precious metals positions. But again, one of the fundamentals is that gold is liquid and you have that ability to maneuver if you need to maneuver into other markets.
Yeah, and I think that this year in particular, especially with what happened in March, it cracked the market because all of a sudden you had this paper market where the price was $12 for silver. I think we were in the $1500 range for gold, but you couldn't buy it.
No.
You couldn't buy it. I have an RSP myself, and my average price in the metals for silver was in the $16 range, and the price is down at 12, but I can't buy it for less than 18. It was crazy. You just knew that you had to sit and wait. But what happened as a result of that is you could see that there were other investments, and I put it into the investment category of gold, where people were looking to take delivery of the physical and they realized they didn't have it. And I also think that the banking institutions realized we need to get rid of counterparty risk.
Mm-hmm.
So is this a theme that we're just starting to see, or is this something we've been seeing building up?
This is a huge revelation, and this is a revelation that is actually happening right before our eyes. So this is just the beginning of it. And we feel very strongly, and this is our opinion, that we're going to be seeing more and more of this. Institutions, investors demanding the physical precious metals. It is imperative to own the physical, and you're going to question if you own an ETF or certificate, where is the gold and silver that back it up? And that is what many investors are looking for. Institutions want to protect against from that situation from happening. So banks are asking for delivery and major investors are asking for delivery. And this is a huge trend. So moving forward, we will see that trend continue in 2021.
Yeah, and I think let's talk a little bit about the fundamentals. We look at a few fundamentals. One is the debasement of currencies. And I think this chart that's up on the screen right now demonstrates that, because it's not really the gold price that's moving higher. It's that all of these currencies on your screen right now are devaluing. They're debasing their currencies. And you'll see in the next few charts how much they're going to be debased. And so gold and silver as a hedge against debasement of currencies and the effect of that, which is inflation, that's one side of it. The other side of it is also geopolitical. How do you see that playing out maybe going into 2021?
Well, the geopolitical concern is, it's at the forefront right now. This is a major issue, a major fundamental that we drive home. And investors are not looking to, roll the dice with wealth, and you're looking for liquidity, you're looking for security and preserving wealth. And this is the main point. During times of the geopolitical issues, uncertainties, investors park their wealth in gold, and they have done this throughout history. So this is nothing new, and the geopolitical issues will be paramount, especially going forward.
Yeah, and I think one thing, and also we have to understand that this year in particular, the central banks have created $12 trillion plus in a very short order.
Just like that, yeah.
And there's only $10 trillion worth of gold, and it took thousands of years to get there. So I had an interesting conversation this past week where the client was talking about, well, if the price of gold is rising, they could really ramp up the mining. But
really,
throughout history, you've only been able to mine and add to the gold supply by about 2% a year. Mm-hmm. I think it's less than that now.
It's 1.5, yeah.
And it takes a year to ramp up a mine. And the question became, at full capacity, how much could you really add to the gold? How much more could you add to your gold production in a year? 10%, 20%? You're not going to double production. So the takeaway here is that the politicians with the central banks can print money way faster than you can earn it, and way faster than you can pull gold and silver out of the ground. And that's why ultimately they are the safe haven, because there's no counterparty risk. Now, some people will ask when they're looking at this chart, what happened in 2013? Why did the price go down in 2013? And I think it's kind of answered with this chart, which is basically the Federal Reserve's balance sheet. Now, this isn't the global debt. This isn't the US debt, their trade deficits, whatever. This is just the assets on the Federal Reserve's balance sheet. And I think the answer to 2013 is that after 2008, when you see that first spike up in money printing, that by the time 2013 came around, the market was buying the narrative that it worked. They were buying the narrative that this money printing worked, that one of these days interest rates are going to go back up to 6%. Let's put Bernanke on the cover of Time magazine. The new normal is just around the corner, or getting back to normal is just around the corner. But that never happened.
No. And look how quickly it got digested. It was one down year in precious metals, or gold and silver. And the narrative pretty much broke down, because the kick the can down the road is not going to work, and it will never work, because this is the type of central banking system that we have globally. This is a fractional reserve system that relies heavily on a story, a narrative, and money printing, and the machine to money print. So we here at Guildhall see gold and silver as money, because it has intrinsic value. You cannot print it. It is scarce. So if you don't own any gold, you're lacking the insurance policy that you need for your wealth. So give us a call and get started.
So, you can see on this chart in particular, 2008, we thought that was big. I remember John Paulson went to Congress and said, we need, I don't know, 700 billion. What's a number I can think of that's bigger than I could imagine? And of course, it wasn't enough. The Fed continued to add assets to its balance sheet, continued to support the market. Interest rates never went back up to normal. This is why we talk about the fact that whether or not coronavirus would have happened as a trigger, you can see in this chart that the Fed had no chance. They tried to pay off the balance sheet. They failed. They were already starting to add back to it with the repo market that we were just discussing. And then all of a sudden, they just throw all plans out the window, because the next crisis came along, and the next crisis was bigger than the last crisis. And so this does not end well. And at that point, when the music stops, you need a chair, and that's where gold and silver comes into play. So that's that chart really shows it all. This chart is interesting just in that it just simply shows that gold surprisingly performed incredibly well from 1999 through 2018. And you can see it performed well against the S&P. The only thing that outperformed it was REITs. Now this chart, before we talk about actually owning direct ownership of the metal in a registered account, should scare the bejesus out of anybody.
Certainly does. This is probably the most powerful chart of the year. And what this displays is Canada, weakest member of the G7 nation, exploded in debt. Central bank balance sheets have expanded to levels unseen before. We're sitting at 400 some odd percent to GDP, exploded. How are we going to pay this back?
And I think that that's really been, while we see the trend in the market of people wanting to get out of the system, they're wanting that security. They know that stock market's really high, real estate's really high. How do I protect my wealth at this point? We'd already seen that. And we'd also already seen a trend in the market towards physical. People were demanding the physical. It's one of the reasons why we started the registered accounts the way we did. But I think now the narrative of the money printing, or the money printing narrative, people see it, they know it, they feel it. And they even look at the excesses of the government, where, you talk to anybody, they look at the government, they say, well, they've printed all this money because of a pandemic, but they're spending hundreds of millions of dollars on other things. Meanwhile, they're coming to tax us. They're raising taxes. They're going to float inflation higher. So if inflation rate is, let's say, 5% a year, that means every 10 years you're losing 50% of your purchasing power. What are you doing to hedge against that? And of course, as you saw in that chart earlier, gold has done that job.
Absolutely, and we have to look at this as Canadians. For those joining us and see this, if this hasn't been addressed by your financial planner, your accountant, maybe, Canada has introduced various tools at their disposal, whether it be a bailout or bail-in or potential negative interest rates. These topics have been introduced years ago. And with debts prevailing and continuing to push higher and higher, we Canadians have to take the wheel for ourselves when it comes to our wealth. And if you don't own gold, now is definitely the time to do so. So guys, take a look at this and and address this immediately.
And another trend of this year, Jerry, that I think is going to continue to flow into 2021. We'll look at what Chrystia Freeland was discussing a couple weeks ago, saying she wants to unlock savings accounts.
What does that mean?
Well, we already know there's a war on cash, right?
Yeah.
That's what inflation, saying inflation's at 2%, you go to the grocery store, it's more like 10%.
Yeah.
And you realize, okay, inflation's probably closer to 6, maybe a bit higher when it comes to buying insurance, paying for the school, schools or health clubs or all of these different things, groceries, going out for dinner, whatever it is, prices are much, much higher.
Mm-hmm.
So there is already a war against your purchasing power, against your wealth, but now they're looking for ways to unlock it, which is kind of interesting. And that leads me to think, and we just discussed this on the radio show last week, if Australia is already going negative interest rates,
Mm-hmm.
that's probably the next move in Canada, is they'll probably go negative to get your cash out of the bank and into the markets, or perhaps there could even just do a flat out bail-in.
Mm-hmm.
Do you think that's a possibility?
Well, it's been on the books. I mean, for me, I'm a nerd like that. I look at the Canadian budget every single year, especially since 2013, and that's when the bail-in was drafted. It was put into the Canadian budget, and it has been tailored. The grammar has changed. The verbiage has changed a little bit, but the bail-in is a reality, folks. We need to understand that the money in our banks are just ones and zeros. Everything is just digital. And with digital money, it's very easy to decode, hack, access. So holding a portion of your wealth in a physical, tangible asset that cannot be touched is imperative today.
Yeah, and I think you can print money, you can put cash under the bed, but the government can print it a lot faster than you can save it. So you need something else, right? You need something that's really nailed down, and that's where the beauty of gold and silver. They have intrinsic value. They've been around for thousands of years, and the fact is there's zero counterparty risk when you own them, and that's really going to be the difference here. Is the difference between gold ownership and gold investment. And I think what we've created with the registered accounts is a way towards gold ownership. So just to review, we've talked about currency devaluation, debasement of currencies. This causes inflation. Obviously, there's going to be geopolitical issues amongst different countries. We're seeing that extending all over the world. And then we briefly touched on supply demand. Let's talk about this briefly before we move forward. We talked about the fact that you can't mine it that quickly. You can't add to it, but there is strong demand, but we're seeing much higher premiums. Can you talk a little bit about the premium and how it works with supply and demand?
Yeah, so when we have that spike in demand, you definitely do get an increase in premium simply because you can't access it that quick. And the demand is so high for the precious metals. And to fill orders like that, the wholesalers need to adjust the premiums, and the refiners just simply can't keep up with the demand. So these are supply and demand forces that do have the impact to our costs. But regardless of cost, this is insurance. Regardless of the price of your insurance, you always need insurance in your life, whether it be house insurance, life insurance, auto insurance. It's a must. So you need to just look at it like that, as insurance. Despite the costs, you need the physical.
But insurance is cheap today.
It is.
Silver's trading at $25 an ounce. That's really inexpensive.
It's cheap.
If you look at gold, people will say, "Oh, gold's very expensive here, under $2,000 an ounce," until you point out the fact that we're close to 300 trillion in global debt, and there's only $10 trillion worth of gold. I mean, it's a no-brainer that gold is relatively cheap comparison to that. Also, if you went to the US debt clock and you looked at what gold is worth against the US dollar, it's like $35,000 an ounce. Silver is in the $4,000 range.
Yep.
And even with the higher premiums, which is basically it's just because there's such a high demand, there's not enough product coming into the market. And I think because the institutions are getting involved and more people are looking at ways to get their money out of the banking system, that there's a high demand on that. And that doesn't get worked off until the price is much, much higher.
Yeah. That's right. It will have definitely a force against the COMEX, for example, where we get our spot prices. We feel very strongly that the COMEX, because they don't own the physical gold to back up the COMEX, the physical market will trump, and we believe that the spot price will have to correct because we know the physical premiums. This is the real price of real gold and silver. We're not dealing in paper here. So
Yeah.
supply and demand, huge fundamental today.
Yeah, and I think that that just continues forward because there's the institutions are trying to get the physical into the market, and then the everyday person and investor is running out of options.
That's right.
One of the options that we'll talk about when it comes to holding it in a registered account is this idea of why have cash in the bank at 0% when you could put it into a precious metal within a TFSA.
Mm-hmm.
And hey, if it makes 5%, it's up what? It's up over 40. Silver's up over 40% this year. Then you would have beat your bank, and you're winning the war on cash. And we see that moving, coming more and more as the years go on. So let's get into how to actually own physical metal in your registered account. We're going to start with a very quick video, and then we'll get into some details.
At Guildhall Wealth Management, we help you achieve direct ownership of precious metals, such as gold and silver bullion, through registered savings and retirement accounts. We put wealth in your hands. Guildhall Wealth Management is your partner. We assist with the registration and funding of your account through Questrade. We facilitate the bullion transactions with an international wholesaler. And we coordinate the storing of your physical bullion at a secure, approved vault. In order to acquire your bullion, you will first need a registered account. Guildhall is partnered with Questrade, your RSP custodian. They meet the regulatory standards of the Investment Industry Regulatory Organization of Canada and are a member of the Canadian Investor Protection Fund. Once your account has been set up, you can fund the account in two ways: by contributing directly to the account or by transferring funds from an existing registered account. When registered and funded, you are now ready to acquire your bullion directly from an international wholesaler. All products that are eligible for registered accounts are on the London Bullion Market Association's Good Delivery List. LBMA is a governing body that dictates strict quality criteria and ethical sourcing for bullion. This means that your liquidity is assured. Well-known refiners on this list include Asahi, Pamp Suisse, and the Royal Canadian Mint, who's been on the list since 1919. Once the acquisition has been made from the wholesaler, IROC requires a third party to store the bullion and verify the contents. Our vault partner is an independent, privately held IROC-approved facility that is fully insured with underwriting by Lloyd's of London. Guildhall Wealth Management's proprietary client system is completely transparent and in real time, connecting you to us, Questrade, and the vault. Let's say you're going to buy 5 100-ounce silver bars. Guildhall will provide you with a real-time market price quote by email and with your authorization execute the trade. A confirmation notice is then sent immediately by email, showing that the price you paid is the price we quoted. The wholesaler then delivers the product to your sub-account at the vault within 10 days. Having a sub-account ensures that your holdings are fully segregated from all other accounts. You'll receive an inventory report which has your name, your registered account number, and your sub-account number at the vault. It will list the description and serial numbers for the products, which confirms that your holdings have been fully allocated. Once the inventory is in place, you can visit the vault by appointment and personally audit your holdings. Guildhall Wealth Management is here to make the transaction easy and transparent, ensuring that the highest industry standards are met for your registered account bullion purchase. Guildhall, we put wealth in your hands.
Okay, so you've decided that you want to actually own physical precious metals in a registered account. You want to get your cash out of the system. You want it completely safe, and you want to know that you actually own this product. And that's what we've created with Questrade, Guildhall, and our wholesalers. And we're going to show you how it all works, because a few entities have to come together. But at the end, what's going to happen is you own your product. You have direct ownership of it. There's no counterparty risk. And I just wanted to show you here on this slide that these are the entities that are bringing this all together. So it starts with the vault. We also have a wholesaler who you're buying the product from directly. We need a custodian for the registered accounts. That's Questrade. Guildhall is coordinating everything for you. So we're handling all of the logistics, and we're also working directly with you, the client. So those are the elements involved, and we're going to go into those in a little bit more detail now. So it really starts with the vault. The vault is an IROC approved, which is the Investment Industry Regulatory Organization of Canada, independent vault facility. So it's completely outside the banking system, fully regulated vault, and it's also completely insured, underwritten by Lloyd's of London. So that's really where it starts. And I have to say, one of the things that I've appreciated working with IDS is the fact that they are independent and you can contact them. So, and there's a picture of the vault itself. You can see, looks like a nondescript building, but as you get closer, you start to see all of the cameras around the building, and you see that all the doors are reinforced steel. What's interesting is actually in the vault itself, there's an inner vault, and that's where it's a second building inside the vault, and that's actually where the gold is held. So everything is incredibly secure with this particular vault. But what I do appreciate about them is the fact that they're independent. I've worked a little bit with companies and vaults that were not independent, and it's a nightmare to work with. You want to be able to get someone on the phone and get the answers that you're looking for. And one of the things that we do is we want to provide recourse to the client and proof that they have that product. So we're not sitting here saying, well, there's a third-party audit of your product, don't worry, that should suffice. No. What we're going to do is we're actually going to send you an inventory report that, as you can see, it will have your Questrade account number at the top, your name, and what's most important is your sub-account. That says that all products in that sub-account are held separately from anything else at the vault. It's completely segregated. And then you get the listing of all the serial numbers so you can see for yourself that this product is directly allocated to you. Now, this report, it's been cut off a little bit for the presentation, but it also comes with the contact details for the vault itself, which include the phone number, the email, the address, fax, so that you do have some recourse. If for whatever reason you can't get in touch with Guildhall, you can contact the vault directly. So this is really one of the strongest assets of this, the fact that you get this confirmation of the physical product in the vault. Now, as well, if you decide down the road you want to take delivery of that product, we call that an in-kind delivery or withdraw, you can actually do that. You can, because you already own this product, that we would just work to release the product from the registered account and you would take it home. So that's just to show and prove that this is direct ownership of the metal. Now, the custodian we work with is Questrade. They are also IROC approved and a member of the Canadian Insurance Protection Fund. And what we also like about them is they are independent. We're not looking at working with major banks. Questrade is one of the largest brokerages in Canada, and they've been in business for over 20 years. One of the things that they like to do is they're always trying to encourage new clients. And so if we're doing a transfer from an existing account, they will actually cover those fees, those exiting fees from your other institution. So we work with Questrade. We can help open the accounts. We have actually a counterpart at Questrade that we work with, a partner. And really their sole job is to take care of Guildhall Wealth and Guildhall's clients. So we have kind of a back channel for Questrade as well. So customers don't necessarily even have to go to Questrade. They can contact Guildhall and we answer or get the answers to the questions that they have. So for example, people who have RIF payments where they're forced to take out a certain amount of money every year, we would help clients with that. And recently we've actually been able to help people take delivery of the product instead of just getting a check for that RIF or LIF withdrawal. So another piece of the puzzle is we work with a wholesaler, and that's where the product is being directly acquired from. We work with Dill & Gage. They've been in business since 1976. They're one of the largest precious metals wholesalers in the globe, one of two in North America. And so they're actually able to acquire the product direct from the mints and direct from the refiners, so that the majority, and I say the majority, 90% plus of the product that's actually being acquired within the registered account is usually new product. That's been a trend that I've seen. I remember actually last year, Jerry, we had a client in the registered account, and the number on their Royal Canadian Mint bar was like 00015 or something like that. So that's really great. And so what happens is when an order is placed within the Questrade platform, there's actually a platform connecting all of these bodies, that this trade gets sent directly to Dill & Gage as a purchase order. So there's a matching invoice, and then the product is delivered to the vault within 10 days. So essentially what we're working with is an independent vault facility, IROC approved, fully insured, backed by Lloyd's of London. We then connect with a custodian for the account, which is an IROC approved Canadian Insurance Protection Fund member, and they're helping with just monitor the regulatory side of the account. Then we work with the wholesaler, who is delivering that physical product to the vault, and then the vault is fully allocating that product, and then we send that product out to the client, which is something that I've noticed that there are a few other firms that have kind of started to do this. They might work a little bit with Questrade, I'm not quite sure. But one thing I've noticed is that when talking to people who've used other services, is they're not getting that level of service where they're getting those reports.
That's right.
In terms of the products, Jerry, why don't you share with the audience some of the products that are able to be put into this account?
Gladly. So as you could see, there was a lot of web that Guildhall acts as a hub, bringing everything together. The custodian and the wholesaler, and the client yourself. One thing is all about counterparty risk and eliminating counterparty risk. This is not an investment. We're actually putting in physical gold in the account. So the key of this is to ensure that you own the physical product in the account. And what we do offer is LBMA goods. The LBMA is probably the most important entity governing gold and silver. They set the standards and the criteria as to who can refine gold and who cannot refine gold, ensuring that the gold is ethically mined, so on and so forth. And what that does for you is it ensures your experience and ensures your liquidity. So there are major refiners that are being offered, whether it be Royal Canadian Mint, PAMP Swiss that we offer, Asahi, Nadir. There are various brands, but what we have to bring to the table at Guildhall is good delivery product, LBMA approved. So despite the name and where they're sourced from, all we really have to ensure is that it is LBMA approved to ensure your experience and your liquidity. So whether it be the big gold product, whether it be a kilo bar of gold or a 1 ounce gold bar, that is the bread and butter for the gold side. And for the silver side, it will be a 10 ounce bar and a 100 ounce bar in the account. But we do have coins and maples available for direct purchase at this moment in time, as opposed to where we were last year. We had a lot more variety going in these accounts. But today we have just the bars going into the account. Again, they're all LBMA approved, and we stand by those.
Yeah, and a year ago we were basically doing exclusively Royal Canadian Mint product. After March, we did have issues in the registered account there because refiners weren't refining, they were shut down. Miners weren't mining, and so the whole thing kind of clogged up. Lots of talking with the wholesaler and communicating with the vault, and they sort of prioritized us, and they said, okay, we have to make sure that these guys are able to get their product. So after about a month or two, we were able to make sure that we're securing the physical product for our clients. And in order to do that, they've opened up the amount of refiners available. They're all LBMA approved, but we're no longer just doing exclusively Royal Canadian Mint. And that might change over time. I think pricing will change everything. Speaking of.
And we obviously, as an investor, you want to know how things are priced. So we're not dealing in paper, we're not dealing in certificates, futures. We don't believe that those offer the wealth preservation that you need and the zero counterparty risk that you need to make this worthwhile. You're looking at physical gold and silver. So when we start, we have to understand that yes, we do follow the spot price, but to actually get the physical, there are two things that are going on. There's a fabrication, which involves the mining, the melting, the minting, and all the logistics behind the scene that comes from the refiner, plus the supply and demand. All of those little things tack on a fabrication premium. Further, then Guildhall will add a dealer premium, which is a retail fee, which is normal, whether it be inside or outside of the registered plan. If you're buying direct from Guildhall, these premiums are kept competitive and nice and low for you. You can pay in US if you'd like to. Alternatively, you can pay in Canadian as well, since we are dealing here in Canada and in loonies. So that is the breakdown of how gold and silver are priced with Guildhall through the RSPs. So if you have any questions about that, we will be happy to show a breakdown, a quote for you in the future.
Now, in terms of other small costs of doing business, within the registered account, there's going to be a trade fee of $19.95. When we showed you the serial numbers on the inventory report, what's happening there is actually at the vault, everything stops. And there's two people monitoring the actual allocation of that product to your specific report and to your account. And so that there is a bar charge for that of $2 per bar. And then, of course, there's the storage and insurance. So we're physically storing your asset and it's physically being insured. Now, again, you have direct ownership of that product. So the big difference here is you now directly own this product versus investing in the market. So for example, if you're investing in an ETF, there's a counterparty, which is the custodian of the ETF, you don't actually own anything. So that would be an investment because you have counterparty risk. A pool account, you're sharing product with other people. Again, they might list the serial numbers of the product that's in the pool, but you don't have specific ownership or direct ownership of that. And therefore, what you have is counterparty risk, so you have an investment. A gold-backed fund, you're trusting the company, again, the management, the custodian of whoever is physically putting you into that fund. Again, you're not getting the allocated product yourself, and therefore you now have counterparty risk. You're trusting that other entity. And so I view all of these things, Jerry, as investments, not direct ownership. So to directly own it yourself, you can see what the costs of doing business are, and we're fully transparent about that. Now, we understand that everyone is cost sensitive, price sensitive. So there's a trade fee, there's a bar charge. So what we do is we have a promotion. For every $10,000 US that you invest, you get 1 gram of gold as a rebate. Actually, that goes up to 10 grams of gold, which right now is worth about $700 for that. So,
US, yeah.
So that's US. Thank you, Jerry. So that's going to go a long way to cover your trade fee and your allocation fee, and then really that's going to be covered, more than covered, in your first gram. And then the subsequent grams are really just a rebate back to you, and we actually ship that to you. Jerry, do you want to talk about opening the account?
Yeah, fairly simple. So we can open an account within about 15 minutes over a phone call. What we do is we will send you an invite similar to this today. We'll send you an invitation to jump on another Zoom presentation or just a phone call, and we will provide you with a checklist of things that you would need to have handy, specifically your identification, SIN number, statements if you are transferring from another institution. If you're rolling over an RSP over to Questrade and us, we will facilitate that for you. So the account opening process is fairly simple. You'll be contacting you over a 15-minute phone call. Once everything is open and ready to go, we'll submit the transfer document, or we'll provide you with the steps on how to fund the account, whether it be an online bill payment, pre-authorized debit into your account, a draft into your account, or rolling it from an institution. Typically, it takes about 2 to 3 weeks to transfer. But once everything transfers in and the cash is in your account, we'll then jump on the phone again, talk about the market and what do you want. A little bit of gold, a little bit of silver, 50-50, more silver than gold because of the silver to gold ratios. The silver to gold ratio right now is humming around 75-1. So silver is really inexpensive and has a tremendous topside potential. So if you want the growth, you want more silver in the account. But either way, this is really about protecting your wealth and getting started. So we'll be more than happy, Jeremy and I will walk you through the entire process from the very beginning, answering all of your questions, even getting Questrade on the phone if you have any questions about which accounts may work best for you. If you have kids, RESPs, these are great. So encourage you to get started today.
Yeah, and we've opened hundreds of accounts ourselves.
Hundreds.
So
Yes.
we're very we're used to it. It's very easy for us, and we're happy to help you get started with all of it. So with all that said, let's open up to some questions that you might have. And also, if I might, we actually just launched a brand new e-store to try to make it even easier for people to acquire precious metals. And we do find that out the gate, it's nice to maybe crawl, walk, run if you've never acquired metals before at all. Maybe getting to registered accounts is maybe a bit of a leap, but certainly getting involved in the market by buying, a couple ounces of gold or even, a few tubes of silver maples, puts it in your hand, gives you the feel of what this is all about. One thing I notice when people are buying for the first time, there's a sense of accountability finally. It's like, oh, my investment is in my hand. Well, it's because you actually own something now.
That's right.
You're not trusting someone else and you're not blaming someone else if the market goes down. This is now this is your wealth in your hand. So yeah, let's get into some questions here. So we have, Jerry, when
cashing out TFSA, can we get the funds in US or Canadian? Thanks for that question.
The answer is yes. This is a nice feature actually of Questrade, which is they will keep it in the currency that you're invested in. So if you have US funds that you're transferring over to a TFSA from another institution, they would remain in US dollars. If you have a US dollar account and you want to deposit that into a TFSA, you can do that as well. If, say, for example, you've sold off your precious metals, it gets sold off in US dollars and it doesn't convert until you say so. So this is really something that is unique to Questrade because they don't try to just get the conversion rate off of you. So they keep it in that currency.
Yeah, a lot of flexibility in these accounts. You have the ability to take US, Canadian, or even take the silver and gold out of your TFSA, which is a great option, especially for the RIFs. I love that idea that, in the future, if you do have fixed income and you do make money, coming in from, let's say, real estate, if you have a real estate investment and you just don't necessarily want to take the cash from a RIF, you can take the metals out. I think that's a great feature.
Yeah. So another question we have is, can we take our privately owned physical metals and deposit it into a registered account? Unfortunately, we can't take private product and put it into the account. You can take your product that you've purchased in the registered account and take that out because you've purchased it, you own it. But one of the things that I see people doing, and I've done it myself, is let's say we want to make a contribution to our registered account this year, but I don't want to take a loan. I don't want to use any of my cash. I've got other things to do with it, but I have that gold or I have that silver. Well, I'm happy to sell that and get the cash and deposit it into the registered account and then buy it back. Yes, there's some cost of doing business involved. Let us know that that's what you're looking to do because we'll help you out in terms of making it more viable economically for you. But I think that that's certainly an option. If you bought gold at $800 an ounce and it's trading at $1,800 an ounce, why not use some of those profits to be able to actually get the benefit of the contribution? So that would be a way that I would approach it. And then same with looking at the TFSA, it's still very early days in the metals market. So especially on silver, if you bought silver at 18 and it's 25, you might want to say, yeah, I'll sell some and then I'll buy it back in the registered account. Yes, there's a bit of cost, but the gains down the road are going to be worth it. I actually just had that conversation with a client who just sold off a certificate with with another bank and then sold the certificate and then is having the money moved over. So that it's going to take a few weeks for the money to come over. But the client was fine with it because they'd purchased silver at $15, $18. Here we are at 25. They'd made money. They're okay to kind of spend a little bit to get to that next level. Jerry, I'll give you a question here. Is there a cap on the insurance for your investment?
Cap on the insurance? No, so there is Lloyd's of London insurance. The valuation on that is, I believe, in $500 million, I think, on the valuation for the insurance, plus the CIPF Investment Protection Fund covers up to, I believe it's $5 million, and I believe Questrade also took out their own insurance. So the insurance, there's pretty much no limit on this for the precious metals, at least considering the amount of precious metals available. There's more than enough coverage for the metals.
And also that's why it's a 1.25% based on the total metal value, right? So as the value is increasing, you're continuing to cover those costs of doing business. And really 1.25%, I mean, management fees are usually twice that.
Yeah, I was looking at a bond fund from one of the major banks, and their MER was 0.95%, and they had another annual fee of 0.55%, and those are hidden fees. You really have to look at the prospectus if you have bonds or other investments. So for 1.25, you're not only ensuring that you have something physical with zero counterparty risk, but it's really competitive when you look at other MER rates for paper.
And another question we have is, how much gold and silver can I buy in a TFSA account? So the limit in a TFSA, if you've been eligible the whole time, is right now, I believe it's $69,500. That's going to go up again in the next year. So you can basically buy over $65,000 worth of product in your account, and you can divvy it up in any way that you want, gold or silver. If you're unsure of how much you can contribute to a TFSA, one thing you can do is actually sign on to your CRA account, and on the first page you scroll down, and it'll actually tell you what your contribution limits are for your TFSA and your RSP. So if you're not sure, you can do that. Also, you are allowed to hold RSPs and TFSAs with multiple institutions. So if you have a TFSA and you have some investments in there and you're happy with them, but you want to own precious metals in a TFSA, you're allowed to open up with Questrade and move on with that.
There's a question here: do all dealers outside of Guildhall buy LBMA products? Well, no, they don't offer all dealers do not offer LBMA product, nor do they offer uncirculated. I think that's something that separates Guildhall from the rest, is that we believe only in LBMA product. Further, we think that product should be brand new, uncirculated from the public. We adhere to the LBMA rules as well. They're very strict to ensure that there's a closed loop. And as soon as you acquire other non-LBMA product, you kind of start to compromise the chain of integrity. So I can't speak for the other dealers, but what I can speak to you on is at Guildhall, we take this very seriously, in that you want to ensure that you have LBMA. Why? Because it's real, number one. You can test it, you can visit it, you can sell it when you need to, you can acquire it when you need to, but overall the experience needs to be met.
And as far as within the confines of the registered account, liquidity is absolutely assured. Our wholesaler guarantees to deliver the product within a certain amount of time and guarantees to buy it back no matter what, no questions asked. So one of the benefits that we get is when we do a sell order or a buy order, we actually can see what the price we're going to pay, and we have 10 seconds to secure that price before we refresh. And that's basically meaning that our wholesaler is backstopping all of this. And the key is that it is LBMA approved product, which means when they buy it back from us, they can resell it to anybody that they need to in their portfolio. But as far as if you own LBMA approved product outside registered accounts, that's the key, because that means there's no questions. It's very easy to go onto the LBMA site and see that they're on the good delivery bar list. And it just makes it that much easier when it comes time to sell. When people are not buying LBMA approved product, they may be saving on price, they may get it a bit cheaper, but it's not going to be as easy to sell.
I'll take the next one.
Sure.
What is the benefit, Dan asks, what's the benefit of storing in the vault versus a safety deposit box? Well, you can't store gold and silver in a safety deposit box and have that in a registered plan. So that's number one. So this presentation was about RSPs. So the vault, because it is IROC approved, it is enabled to hold assets such as gold and silver within the registered plan. So you can definitely hold gold and silver outside of a registered plan in a safety deposit box if you have enough room. But one of the things that I argue is that because gold and silver are sort of your hedge against certain things like financial systems, banks, even currencies, you don't necessarily want to hold your gold, which is your hedge, in the institution that you want to hedge from. So it's kind of it's not a good idea. Further, what we offer is the inventory report. This is actual proof that you have ownership somewhere at the vault and you know where to go, versus you don't have any proof of what is in your safety deposit box besides your word and a picture. But the vault, or the bank, I should say, has no record of what you have in there. So that is another key. And plus insurance, they won't insure what's inside of the safety deposit boxes. So, and further, liquidity, you actually compromise on liquidity as well at the bank. If you're wanting to sell your gold, or especially silver, silver is a very it can go up and it can go down very quickly. If
You have to be nimble.
you have to be nimble and versatile. So you need to be able to pick up the phone like you can with Guildhall, sell it immediately, and you have your confirmation within 10 seconds.
Yeah, I'm all for spreading it around.
Yeah.
Nothing wrong with spreading it around. I think the advantage of vault storage is that you're getting security and liquidity, so that if there's a portion of your product that you think I might want to sell, for example, we have a client who's going away for a year. Well, it's going to be pretty hard to go to the safety deposit box, pull the gold out, drive to Guildhall when they're halfway around the world. So being able to have it in the vault and be able to pick up the phone and sell right away is definitely an advantage. I will admit, in the past, I think safety deposit boxes have been an incredibly safe place to put your metal. I am a bit concerned that after what's happened with the pandemic, that a lot of banks shut their doors. That's a bit concerning to me, that at some point, how do you, if it happened at that point, who's to say we don't see bank holidays down the road? And I'd hate to have someone who puts the majority of their metal into a safety deposit box and there's a bank holiday and they can't get to the vault. The vault or to their safety deposit box, the vault that we have, it's independent. It's outside the banking system. During 9/11, the vaults were all still open. So it's a very different thing because it's independent and private. So that's what I would say about that. Just a couple quick questions before we go. Let's see. We have a rare colored diamond question, Jerry. What about rare colored diamonds? Are they better? Are they a better bet than gold?
I think they go hand in hand, Jeremy. The idea of holding a hard asset is that they will protect against inflation. So whether it be gold or a natural fancy color diamond, you're getting rarity in your hands and you're getting it away from the banking system. A lot of our clients are, as you mentioned, they tiptoe into the market and they go full steam ahead. You start out with a little bit of gold and silver in your hands, you do the RSP, and then you round out your portfolio with a rare colored diamond. These diamonds have performed tremendously. One of the Argyle mine, the mine responsible for 90+% of the world's pink diamonds, has shut down. And we're going to be seeing some tremendous gains in the pink diamond market especially. But the idea would be to complement a hard asset portfolio, you want to have a little bit of both.
Yeah, I think ultimately they're very rare. They've performed quite well. It's all about having assets that are nailed down, that are outside the banking system. Again, the takeaway here if you take away nothing but this, the governments have printed over $12 trillion in less than 6 months, and there's less than $10 trillion worth of gold that's been mined over thousands of years. They can print money much faster than you can earn it, much faster than you can earn interest on it, and much faster than you can pull a natural fancy colored diamond or an asset like gold and silver out of the ground. And so that's why those are the places you want to be, because that's where the protection is. And what we're looking at is taking that a step further within the registered accounts where you know you directly own this product. And that's really the key here, is that there is no counterparty risk. Typically, you should be able to go to the vault and visit. Right now, we're probably getting close to getting back to that. Right now, they're just kind of have some COVID protocols in place. But usually it's a great opportunity to go to the vault, personally audit your holdings. I actually did it just before COVID really started happening. And it's always a unique experience for the clients. I want to thank Jerry for joining us today, Jeff for putting everything on. It's been great to share all this information with you. Thank you so much for joining. If you want to get additional information, have additional questions, or want to get started on your registered account, you can just email us at investing@guildhallwealth.com, or just reply to the emails that we sent out for the Zoom meeting. And or you can call us at the office, and we're happy to take care of you. Thank you so much again, and we look forward to speaking with you soon.